The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Box on this Friday morning. You're nearly there, everybody. Well done. I'm Steve Sedgwick, and these are your headlines. President-elect Trump taps former Florida Attorney General Pam Bondi to lead the U.S. Justice Department. Hours after his original pick, Matt Gaetz, well, he dropped out, didn't he, amid a cloud of sexual misconduct allegations. German Defense Minister Boris Pistorius says he will not stand against unpopular Chancellor Olaf Scholz for the SPD leadership, ending weeks of speculation over who will lead the party into February's election.
This is my own sovereign and my own personal decision. Over the past week, I've repeatedly stressed, and I'll say it here again with full clarity, we have in Olaf Scholz an outstanding Chancellor.
Northvolt runs out of charge, filing for Chapter 11 bankruptcy in the US and dealing a blow to Europe's hopes of becoming a behemoth in the lithium-ion battery business. And Bitcoin soaring towards six figures, coming within striking distance of $100,000 per Bitcoin as investors continue to favor the Trump trade. Hey everybody, nice to see you. Look, not for the first time I got myself thinking when I read the headlines, and I think the art of a good headline is not for you to agree with it, it's to get you thinking. And that fourth headline I just did there, I mean, they're all interesting, but the Bitcoin nearing $100,000 as investors continue to favor the Trump trade. And I think that's interesting because all the other Trump trades have pretty much happened now, and then kind of now people are reassessing, aren't they? We're not seeing a lot of more movement, I think it's fair to say, on the original Trump trades, i.e. concern about healthcare stocks, concern about renewable stocks. There's been a little bit of a blip in the energy sector, hasn't there? There's been blips elsewhere where they think that the Trump administration will be beneficial for that sector and those stocks. But Bitcoin, if it is still moving on the Trump trade, I think that's very interesting, which means it's obviously got a little bit more momentum than some of the other trades out there as well. But we'll speak to an analyst about this in a few moments' time. In terms of the broader US markets, I think it felt like a little bit back to usual yesterday, i.e. we were concentrating on earnings because we had the Nvidia after hours from Wednesday to digest. We were looking at Alphabet, concerns about the legal position there and whether there's going to have to be some form of spin-offs to negate the threats from the DOJ and others as well. And then we were looking at data, and I really like looking at data, and as indeed do you do as well. And what did we get? We got confirmation that it's tough out there from the Philly Fed. We got confirmation that actually, despite being tough out there, people still are by and large employed. The initial jobless claims was the lowest figure we've seen since April. And I think that's interesting, given the concerns that we had previously about that weakish payroll recently. And we also saw that the housing market, it's fairly ugly, but existing home sales, which is the bulk, let's be honest about it, did actually rise in October. So it was a day when we looked at stocks, when we looked at data, rather than the broader thematic momentum or Trump trade. And I think that's dare I say, it's quite healthy. Today we've got SMIs, by the way, S&P PMIs, I should say. I think that's interesting, as indeed is the Michigan consumer sentiment, and we've also got Kansas City Fed Services Index as well, if you're interested as well. What's the net of all of that? Well, the net is that the US markets for the week so far are solidly higher, 1% to 1.6% for the major three indices. Let us move on, have a quick look at the treasuries and where they are currently trading as well. 4.4%. And again, It's pretty steady stuff in Treasury world at the moment. I haven't seen a vast amount of volatility there, despite the fact that obviously there are lots of concerns about what a Trump growth strategy, and lots of hopes as well, I should say, by the way, a lot of hope and some concerns about what the Trump growth strategy will entail, not just for stocks, but for the consumer and for the broader economy. In terms of the dollar, it has maintained its ascendancy. The dollar index up 0.3% for the week so far. But the euro, look at that. I mean, why? I said this a long while ago when it was trading 108. I was like, why would you bid the euro at the moment? I don't mean that because I'm trying to beat up on Europe. I'm looking at the data. I'm looking at the politics, I'm looking at the corporate backdrop, and I can't see why, at the moment, euro should have any bid. And we've come off quite aggressively in the last 3, 4, 5 weeks as well, from a 107, 108 handle to a 104 now. You know what's going to happen next, and you can bet sure as day, follows night, that we're going to get lots of people commenting now about parity. Now, whether that happens or not remains to be seen as well. I will just mention the pound still is trading at 125.67. That's despite the fact we had some mildly higher than expected CPI data this week, which of course then means potentially it's going to be harder for the Bank of England to have a December cut. But that one's definitely in play. Data, I mentioned this. US weekly jobless claims fell to a 7-month low of 213,000, signalling a rebound in jobs growth after last month's declines amid mass strikes and hurricanes, of course. But continuing unemployment claims actually rose to their highest level in around 3 years. So it's a mixed picture, isn't it? A sign that whilst fewer workers are getting laid off, those who are out of work may be finding it harder to find jobs. Let's speak to someone I very much enjoy speaking to, and that's Charles-Henri Monchal, who is the CIO of Bank C's. Charles-Henri, lovely to see you today, sir. I made this grand statement that actually I think not that the Trump trade is beginning to fade, but that we're beginning to look at other factors as well as the political situation in DC. Feel free to refute that if you like, but what do you think is driving these markets?
Well, we continue to see this broadening of the market advance. I think it was very clear yesterday with the Dow Jones, outperforming the Nasdaq. We also had, again, some short covering on US small caps, and the Russell 2000 outperformed the two other indices. But you're right, Steve, it's pretty normal, by the way. If you look at 2016, the Trump trade at the time was very strong till the end of November. And then it started to roll out in December and January. So I think it's very possible that some of the Trump trades are starting to show a bit of fatigue. We think that this might continue in 2025. The reason being that, again, we believe in this broadening of the market advance, in this rotation. We still like the Max 7, but we think that other sectors, other stocks, will perform potentially better than some of them next year. So we believe in this market advance, and we believe in the broadening.
Yeah, the problem is, when I start looking at broadening and I look for best in class, I see expensive stocks. And look, I'll use, for example, the Target Walmart experience of this week. Target's had a howler. I don't want to talk about that. I want to talk about the best in class, which appears to be Doug McMillan's Walmart. It's done brilliantly. It has had a fantastic rally. It's not a tech stock. It's not a Magnificent Seven stock, but it's up 68% this year. I've got to pay 32 times forward to own a really good supermarket. Charles-Henri, when I look beyond the technology illustrious names, I see good but expensive stocks.
Right, and this is to us one of the main negatives is that indeed, there is a very high price to pay for US exceptionalism, and this is becoming indeed a very crowded trade because the reason you just talked about Europe before. We haven't talked about China, but the thing is that the whole world is going full speed into US stocks, and they are ready to pay a premium for that. And this is why everything sounds expensive. But investors are still okay to pay this premium because it's in the US. And also there is one thing which I think is misunderstood is that if you look at the market in aggregate, the net supply of US stocks is negative. There are more share buyback than share issuers. This is a very big difference with some of the bull market which went busted in the past. Remember, 2000, 2001, the internet bubble, there were a lot of supply, a lot of IPOs. We are not seeing this. There are less and less stocks available, whereas the whole world is trying to catch some US stocks. This is why, let's say, the leaders, as you mentioned, Walmart, for instance,
And
are getting paid a very high price because everyone wants them.
yeah, Charles, there's nothing new about de-equitization. You and I probably had this conversation a decade ago. I certainly had this conversation over a decade ago. De-equitization is something that's been happening, but not just in the US. And let's go back to Europe as well, because I see the problems of Europe. I see it every day. So do you as well. I see our growth problem. I see our image problem as well. I see our lack of liquidity. I see our lack of cohesive capital markets, but that's another story as well. But for all of that, I look at international, European-based companies that are trading at historic discounts to the US names we've just been talking about for the rest of this interview as well. And I can't help thinking whether there is an opportunity for you and your colleagues in CIO world.
Yeah, there are definitely some value in these stocks, but we need a trigger. And you mentioned politics before. This could be a trigger, especially in Germany. If we get a feel that when there is a new coalition, they are ready to go with some kind of fiscal expansion. It's not going to be, like a Keynesian bazooka, but at least, let's say, some willingness to do something and to, let's say, give some leeway on the fiscal side. This could be the trigger for some kind of revaluation of the European story. You're right, many of them are trading at a nice discount. There is also, by the way, this M&A story. Americans are looking for good targets. Obviously, for them, Europe is cheap. So it's very possible to find some very interesting targets in Europe. So that could be a surprise, by the way, next year, is that at some point, European stocks come back with a vengeance. We still don't, believe in the long-term story. We still believe in this US exceptionalism. But there will be, indeed nice tactical plays on the EU stock side.
Charles-Henri, something ludicrous happened yesterday, and I'm not talking about Bitcoin getting to nearly 100,000. I'm talking about a crypto chief called Justin Sun, who is the founder of blockchain network Tron. I don't know if you saw this one. He paid $6.24 million for a banana taped to a wall.
Yeah,
now, I don't know anything about Bitcoin. I've been in the markets for 36 years. I know nothing about Bitcoin. I can't judge it. I can't give people a cohesive view on it as well. But tell me, when you've got crypto chiefs paying $6.2 million for a banana and Bitcoin is trading at nearly 100,000, can you please make some sense of all of this for me?
No, I would not necessarily link the two. I think that we need to take out a bit of emotion from the Bitcoin story. On our side, we believe in it. We believe that now it's the seventh largest asset in the world, but it's nowhere in most portfolios. The trigger are there. There is adoption coming, and we need to have a very close eye on these strategic reserve Bitcoin story in the US, because if they do so, this is a very classical supply-demand mismatch. If the US starts to accumulate some Bitcoin, companies will do the same, other states will do the same, and with supply being almost, let's say, fixed, if demand goes up, if we look at economics 101, when demand is going up and supply is, almost fixed, obviously the price, keeps moving up. So I will just take out the Tron story with this banana, as you mentioned, and really focus on why, in this world of fiat money debasements, there is very big demand for store values. As a reminder, this year, the best asset classes are Bitcoin, gold, and silver.
In the world of fiat currency, and I agree with you, you had me down the road about fiat currency. I worry about issuance as much as anyone. I think I've probably, more than any other business journalist, gone on about the debts that the states are accumulating. But in a world where there's fiat currencies, I want to hang on to hard stuff that I can actually trade when it comes to back down to barter world, that's my kind of Michigan militia trade as well. I can't see how Bitcoin is going to buy me tins of beans and what have you when everything goes haywire.
But this is not the way I look at it. I think it's really the power of network. There is this demand for alternative currency. alternative reserve currency. And they are indeed, let's say, ticking the box on that side. It started like a technological experiment, and now it's moving to an asset which is indeed looked even by the number one power in the world, i.e. the US. This is the first time we have a crypto-friendly government at the White House, and this is changing things. So the last word on this is that I think the best is to stick to what you like, what you understand. For those who still don't understand Bitcoin, it's probably, let's say, fair to avoid it and to stick to the real assets you mentioned. But I think it's worth having let's say, a second look at it, because there is something going on there, and it might continue to be a very strong story in 2025.
No, I hear you, Charles-Henri. I hear you. There's only a limited supply of Bitcoin out there as well. The only slight fly in the ointment out there is, as of earlier this year, there's still 13,000 other cryptocurrencies out there. But hey, you pays your money. Thank you, Charles-Henri. Lovely to see you, my friend. Thanks for joining us nice and early. I know we got you out of bed early. I'm sure we didn't, actually. I'm sure you were probably on the treadmill or Peloton or something. Charles-Henri Monchal, who is the CIO of Bank C's. I'll see you in London soon, sir. US President-elect Donald Trump has named former Florida Attorney General Pam Bondi. Yes, someone who actually has been Attorney General, as, fun enough, the new pick for the Attorney General. Bondi is a close ally of Trump, as she was part of his legal team during his first impeachment trial and joined efforts to overturn the results of the 2020 election. Trump's choice comes after his initial selection, former Congressman Matt Gaetz, ruled himself out of the running after meetings with senators, saying he did not want his confirmation to become a distraction. Gaetz suffered a series of allegations of sexual conduct, which he denied. Now, here's the thing. What's Gaetz going to do next? Is he going to take back his resignation letter from Congress? But if he does that mean the report on his actions are going to be released? Tricky one for that gentleman. Anyway, President-elect Trump has also reportedly discussed the possibility of choosing former Fed Governor Kevin Warsh for the role of Treasury Secretary, with a view to nominating him as Fed Chair when Jerome Powell's term ends in 2026. Now, this is according to the Wall Street Journal, citing people familiar with the matter. It says Trump has not made a final decision on the Treasury role. Right. Coming up on the show, Defence Minister over in Germany, Boris Pistorius. Well, that didn't last long, did he? He was in and he was out. Anyway, he's ruled himself out now of the race to become the next German Chancellor. We'll have more on what that means for next year's election. Plus, the Swedish EV battery maker Northvolt files for Chapter 11 in the US. So we'll bring you the details later in the show. And don't miss Charlotte's conversation with Antoine Arnaud. He looks very smouldering in that picture, doesn't he? Very good-looking chap. Looks to boost the fortunes of football club Paris FC. Highlights from that interview coming up at 6:45 London time. German Defence Minister Boris Pistorius has told the SPD party leadership he's not available to stand as the lead candidate in the upcoming February snap election, ending days of speculation that he may replace Olaf Scholz as the party's candidate for Chancellor. Pistorius also reiterated his support for Scholz and his re-election bid.
I've just told my party and the leadership that I will not be running as a candidate for the office of Chancellor. This is my own sovereign and my own personal decision. Over the past week, I've repeatedly stressed, and I'll say it here again with full clarity, we have in Olaf Scholz an outstanding Chancellor. He has overseen a coalition made up of 3 parties that even in normal times would be difficult to lead, and he's taken it through what has perhaps been the country's biggest crisis in decades.
Automotive and chemical sectors in Germany remain major areas of concern when it comes to future growth, according to a new report by BCG. It also warned recession fears in Europe and higher costs continue to weigh on all key industries in the country. Delighted to welcome to the show Jan Lindenberg, who is partner at BCG. Jan, thank you very much indeed for joining us. In fact, you've been in my monitor for the last 5 minutes, so I know that I'm late getting to you. So thank you very much indeed for that. Right, first of all, tell me what's wrong with Germany before we talk about what we can do to improve it.
Good morning, and thanks for having me. I think So the question is maybe not what is wrong with Germany, maybe what is rather what is driving German companies. And what we see from our analysis is simply that the economic uncertainty simply remains high, and fear and the fear of a recession leads to increasing restructuring concerns throughout the current year.
But something must have happened, Jan, and I don't understand what it was. From Germany to be... And look, I'm a Germophile, by the way. I think when Germany's at its best, it is magnificent on the world stage in terms of its economic performance. What went from it being this confident, industrially adept, technologically adept exporter of goods, when it's still a vast exporter of goods, by the way, they still have a massive surplus, to actually having a crisis of confidence? When did this change? And I guess then we move on to the remedy.
To be very fair, I think I cannot answer the question on, so to say, when things started to get worse, so to say. I can only look at the current situation. And when we look at the recent past, I think for sure what was inflating the already serious situation maybe has been the change in interest rates, which is, first of all, of course, hit the real estate sector, and the corresponding inflation, which, of course, affected the overall economy. And that is maybe something that was driving the development in the past 1.5, 2 years, especially.
Okay, so look, BCG and all the other consultants, they will have a remedy for this. That's what consultants do as well. How does Germany get out of this mess?
So first of all, I think we all know that an economy is benefiting from political stability, right? And what we just see is that with the fear of a recession in Germany and the high political uncertainty from the major elections in Europe and the USA in this year, we just see that uncertainty is high, and probably political stability going forward will help all sectors, and we all know that this might be beneficial to all companies in the market.
Jan, I kind of need more than this. I just see that all these amazing corporates, they ride out every cycle one way or other, whether it's the auto sector, the chemical sector, the broader industrials, the steel sector. They've lived with political oscillation up and down for decades as well. They operate in multiple markets on a geographic basis. Having a political setup which is more stable isn't good enough for me. I've got to be honest. Do they need something else other than stable politics from the politicians? I.e., do they need a massive investment partnership with the politicians rather than just a stable government?
Of course. I mean, it's not about just a stable government, and it's also not about just Germany. I mean, it's the overall political situation. And if we look at, and I mean, I think we need to de-average this a little bit, right? So if we look, for instance, at the automotive industry, which is under pressure for a couple of years now, yeah, what are the main drivers behind this? First of all, there is a top line uncertainty, which has hit the industry already a couple of years back, which is permanently driven by the demand in electrification, for instance, right? Then due to the overall inflation and cost increases also in raw materials, we have this huge pricing pressure. Then we have new entrants from China that are also entering the German market, for instance. Yeah? So when looking at, so to say, the results of our industry crisis radar, which just shows that recession and restructuring fears are increasing, we need to look what is behind the individual industries and cannot, so to say, answer this on a macro level.
Yeah, look, and I have been reading your report, and I've been looking at, obviously there's a lot of macro effects affecting sectors which provide goods for the global engine, specifically China and others as well. But let us be brutally honest about it. And I say this from a positive point of view. The Germans are heroically amazing savers. They're not quite as good savers as the Chinese at the moment, but they are very good. What could a stable government do to galvanise consumption domestically as well? Because if I was German, I'd be saving furiously as well, but that's not the answer to getting this economy out of a mess. How does a government with stability, partnership with corporates as well, how do they galvanise that amazing savings pool and actually the strong fiscal position that Germany has at a state level?
Yeah, so first of all, I think what individual governments could do or could not do is maybe a question to politicians. But from my point of view, a stable government would also help to provide strategic planning certainty for companies, right? So, for instance, when it comes to green transformations in sectors like steel, also when it comes to the energy sector, I think all can benefit from clear stability and strategic planning certainty.
Really nice to speak to you from Munich today, Jan. Thank you very much indeed for giving us a few clues. By the way, I just looked at the German gross savings rate. You don't get much change out of 30% as well, which is quite an extraordinary level. Some of the Brits could learn something from that. Jan, thank you very much indeed for that. Nice to speak to you, sir. Jan Lindenberg, who is a partner at BCG. Well, let's stay in Germany. Let's go to the Bundesbank, which says the German economy is facing deep and profound challenges that could lead to a high corporate default risk rate next year. In its latest financial stability report, the German central bank warned of a, quote, significant number of corporate insolvencies in 2025. I wonder if that's the Mittelstand we're worried about specifically. It said household finances, there we go, I just mentioned it. I didn't even know this was coming. It said household finances will remain strong going forward. Well, I've just said that, I just by my own research. I mean, 30% savings rate as well. That certainly gives you a little bit of leeway, doesn't it? Anyway, but the outlook for commercial real estate continues to be uncertain. Annetta spoke to the Bundesbank executive board member, Michael Theurer, and asked him about the risks the German financial sector is facing.
During the time of low interest rates, we have seen an increase of corporate credits and also real estate credits, and now with the increase of interest rates, the vulnerabilities are there. But we can say that now with an already lowered interest rate by the ECB and with the action of banks and of other institutes and intermediaries, we can state that the vulnerabilities are receding in an orderly manner, albeit slowly.
It's interesting because the economy is doing poorly in Germany and the banks still don't have loads of non-performing loans on their books. So don't you see that there's a danger that there might be more non-performing loans coming?
First of all, that was the warning of Deutsche Bundesbank, that we said the banks should not underestimate the vulnerabilities like credit risks in an economic downturn or an interest rate risk, and also the overvaluation of real estate prices. But in fact, we see that our banks are stable, that they are resilient, and that they reacted to these developments. So in total, our banks are stable because they have good capital reserves.
I've just had a brilliant set of ideas. You're going to love this, everybody. Why don't we have something across Europe that actually creates some form of market union on capital? Brilliant. We could also have like some form of banking join up, maybe call it a banking union. Yeah, that's great. Or we could also have, I've got it, consolidation in European banking, having some of the strongest banks in Europe taking out the excess that we've got in countries that maybe have 1,300 domestic banks in maybe Germany. How about that? So we have cross-border consolidation to Germany, we have a capital markets union, and we have a banking union. Why don't we crack on with that?
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.